I'm going to make a fortune off of this, which is great for me.
50-year mortgages. That's like a real thing that they're going to launch here very, very soon. Trump just announced it, and I want to break down a 30-year mortgage for you and a 50-year mortgage for you because
what they just did is something I said they would do 2 years ago, and it's happening. The 50-year mortgage is on their tongue, and we got to talk about this because you have no idea what this is about to do to the housing market. Let's listen to these videos and let's get there. Let's go. We got to talk about it.
Is a 50-year mortgage a good idea? I took some notes down so we can compare a 30-year mortgage to a 50-year mortgage. If we had a 30-year loan on a $400,000 house at today's rates, you would have a $2,660 monthly payment. If you were to get a 50-year loan on that $400,000 home at today's rates, your payment would drop to $2,380, saving you $280 a month. Principal per payment. This is saying how much of your mortgage payment is actually going toward paying off the loan. On a 30-year loan for that $400,000 house, you'd be paying off $327 per payment. With a 50-year mortgage, though, you'd only be paying off $47 per payment. Total interest by the end of the loan. At the end of the 30-year loan, you will have paid $957,600, $557K of that being interest. On the 50-year loan for the same exact house, you would end that 50-year period paying $1.713 million, $1.3 million of it being interest. And last stat, if you were to own that home for 10 years with a 30-year mortgage, that $400K home, you now own $56,000 of it. You have $56K in equity. But after 10 years of the 40-year mortgage, you'll only own $14,000 worth of the home. You won't be able to refi, you'll hardly be able to sell, and by the end of it, you will have given the bank 3 to 4 times the amount of your mortgage. A 50-year mortgage is an awful idea.
You know, when people go to buy real estate, they buy a payment. Same way with a car. It's about the payment. It's not about the price as much as it's about the payment. People get pre-qualified for a certain amount, but they were told that they can afford a certain amount a month. Don't quite look at how much it costs. It's just the payment. And this is what everybody is missing about this entire thing. This is called propping up the housing market. I said a long time ago that the price of houses won't really go down that much. They'll just figure out a way to dilute the payment. I figured they'd go to 40-year mortgages. I didn't think they had to you-know-whats to go to 50-year mortgage. That is a whole nother level. And what they're not telling you is they're going to keep lowering interest rates into the 50-year mortgage. So if we get down to 4, 3.5 interest rates on a 50-year mortgage, the real estate market is going to lose its mind. It's going to keep going up. And the unaffordability will just keep getting worse and worse and worse. Not to mention you'll never truly own the house in 50 years. You'll have paid an excessive amount of money on the principal, and you'll have rehabbed that house 2 or 3 times, 2 roofs, probably almost 3 roofs, and maybe your grandkids will pay it off. This is wild, and I don't think people understand what happened to them. They printed so much money so fast in the form of the Federal Reserve, reducing interest rates almost to nothing, giving out as many mortgages as possible, which inflated the entire housing market. Now they're not going to let the housing market correct. They're just going to change how the loan is amortized. They're just going to change the length of the mortgage payment. And before you know it, you are cooked. In America, the housing market is cooked. But they never allowed it to correct. They never allowed people to get stung for their bad ideas. They just keep giving more debt. And I'm even hearing through the grapevine that they're going to change the minimum credit score to get some of these loans. This stuff is coming. They know the housing market was about to roll over, and they have to keep lowering interest rates. That's the problem. And once they've lowered interest rates back to where they were to fix this whole economic recession we're in that they don't want to say we are, real estate's going to start going up again. The same with everything. People are going to start spending money again. And they got to have the spending of money. The problem is it's creating so much daggum inflation.
50-year mortgages. That's their solution to the home affordability crisis. I want to be crystal fucking clear about something. I am a mortgage loan originator, mortgage broker, however you want to call it, mortgage banker, whatever colloquially. There's a difference between those things, but for all y'all watching this, it doesn't fucking matter. Whatever term you've heard, I'm that guy. I'm going to make a fortune off of this, which is great for me because over the last few years, when the shit has been terrible for everyone trying to buy a home, it's been awful for me because it's commission only. So once again, crystal clear. I'm going to do well because this is happening, and I don't think this should happen.
At least he's telling you the truth. I walked into the office this morning because I'm a real estate agent also, and everybody was like, can you believe that they're going to do 50-year mortgages and lower interest rates into it? Next year is going to be bonkers. It's going to be crazy. People are going to make so much money in real estate. People are going to be buying houses everywhere. They knew what they were doing when they did this. And he's trying to tell you what's about to happen to those that are trying to get in the housing market. We thought that it was crazy before when they brought interest rates down a lot lower than they should have. And then here they're wanting to do it by just stretching out the loan and changing the payment. They don't understand what they're about to do to the price of the house. This is called price stabilization by making loans cheap. He's right.
This is fucking insane. Their solution to the home affordability crisis, as opposed to finding a way to stymie the meteoric rise of home prices or to cap interest rates on companies like mine, face it, instead of doing those things, they're like, oh, well, let's just have all the kids take out more debt over a longer period of time.
See, politicians realize that the normal person doesn't understand how debt works and how inflation works. It's like the pot just kept getting hotter, the water kept getting hotter, and the lobster didn't realize it before he knew he was cooked. That's how they get away with this stuff. And that's what's frustrating about finances and politicians. They know that if the market falls apart, the S&P 500, and they know that houses are too unaffordable for people to own or buy, that they get voted out of office. So what they do is they create these packages that change the way in which we purchase them. Or they back them by the government. It absorbs some of those debt notes that they usually go bad. There's so many ways and so many knobs that they can turn. And most of us don't understand all the knobs until 5 or 10 years later when they start to affect the economy. Hence, politician is now gone. They just kick the can down the road. And I don't think it has really anything to do with the cost of the loan originator or the real estate agent or those things. It's all the cheap loans that they're throwing out there that weren't available years ago, and it happens all at one time. And when you have a lot of cheap money in the market, the price of things goes sky high because there's a lot of competition in the market that wasn't there before.
A 30-year mortgage was already kind of laughable. Like, every time I write one, I talk to the people like, 30 years, they're like, man, you're not going to be in this mortgage for 30 years. You're going to refinance, you're going to sell, you're going to do a bunch of things. But like 50 actually implies the impossibility of ever actually owning your home. And don't even get me started that if you ever reach that milestone of paying off your home and owning your home, the property taxes are still there and they keep going up and up and up until one day when you reach that milestone, your elderly ass still gets booted out onto the street because you don't own fucking shit. This government and these fucking corporations that own this fucking government have got to be fucking reined in. It's insane. People, do you not see? Fine. I'll just make the money if nobody else is going to do anything.
The point of them saying a 50-year mortgage tells me that the market was in serious trouble because 30 years wasn't enough. We went from 15 to 30. 30 wasn't enough to fix the market. Now we got to go 50. What's their next arrow in their quiver? 75, 100? You're going to finance a house for 75 or 100 years? That's the next arrow in their quiver is a longer mortgage rate. They can only take interest rates down so far. This is crazy. I want to know all your thoughts, comments down below. Good, bad, ugly. Right here, passing down generational debt. Exactly right. You'll never own anything in the future. They're signaling that that is the future. Like most people are wanting to rent and you're literally just passing that on. It's crazy. You can pay the house off in less than 50 years. It is possible. Or less than 30 years. I paid my house off, but I didn't go out and buy an astronomically priced house. I bought a little bitty house that I could afford and I paid it off. It's possible. I didn't buy a house until I was a lot older. Saved every penny.
Everyone's freaking out about the 50-year mortgage that just dropped, but I think it's pretty genius. And if you're new here, I'm Theone the lender. I've been a lender for 10 years. I help people every single day from this app buy, sell, and refinance. Let's get into this because I have such an interesting take on this that most loan officers do not share. And I'll start by saying that they don't share the same idea because they're loan officers, not loan advisors like I am. Everyone keeps talking about the amount of interest that you're about to pay over 50 years. And I will say it is pretty crazy. I saw an example for a $400,000 house that it was like 1.7 million in interest or something crazy if you kept that loan for 50 years. But what most people are missing is that the average homeowner in America only lives in their home for 11 years. And that is to say they live there, but they're likely going to refinance the terms of that mortgage. Like the likelihood of you having a mortgage that you get today for 30 years is very low, even if you live in that home for 30 years.
Yes, true. People don't stay in these things for very long. The problem is that they always stay at the beginning of the mortgage, right? They're never actually paying towards the principal. They just keep refining and turning over the note to where they're never actually paying down the principal, you know? And I get what all these loan originators are trying to say. And I get what the first guy was saying with the numbers. That's not the point. I'm looking at the macro here, is that the housing prices never corrected. And they never went back down to where they were. We just figured out how to finance them differently. You know, they always say that the national debt will never get paid down. It'll just get refinanced. And that's what we're seeing with the housing market. They just came out with a new instrument to make the prices keep going up. Cheap money.
And that's because you're going to do a cash out refinance. The rates are going to come down. So you're going to refinance. And every time you refinance, like right now, I'm taking people from a 30-year term to like a 20 or 15-year term. So the idea behind a 50-year mortgage isn't because we want you to be in this house for 50 years. I think that's actually insane that people are even in the same loan terms for even 30 years. The idea is that it gives you breathing room to qualify for a house.
Bingo, bingo. It gets you into a house. Now, is it a great idea to be paying that note? Probably not, but it gets you into the house. That's the way loan originators, mortgage lenders all think. We can get you into the house. Should they be in the house? Probably not. Should they be paying that note? Probably not. Can you refinance it? Yes. And you probably should once you get into it. It's the price point though. The price of the house shouldn't have doubled in the last 5 years. That's the point. I want everybody to start asking questions, okay, about all of this. It can't keep going up. You can only take the length of the napkin from one side and put it on the other for so long before the napkin gets just pulled apart.
And that's the problem that we're facing right now. People cannot qualify. Yes, the savings is like maybe $200 difference from a 50-year to a 30-year, but that $200 difference actually makes a difference when it comes to qualifying for a mortgage. I just ran this example with one of my clients. They're trying to buy a $700,000 house. And if their interest rate was, let's just say worst case, 7%, they're going to be paying like $4,800 for that $700,000 house at a 30-year term. If they got a 50-year mortgage, then they're paying $4,000. But here's the kicker. Their initial budget was like $5,000. So they can still do a $5,000 payment and pay less than 30 years of that entire mortgage. And this is only because this is their dream home. So they're going to be living there for probably actually 30 years. But if you're not going to be living in that house for 20, 25, 30, 40, 50 years, then the amount of interest that you pay in the overall amount is kind of null and void.
On a $700,000 house, we're splitting hairs this much. I'm sorry, you shouldn't be buying the house. And I shouldn't have to have a license to tell you that. That house is too expensive for you. Especially if you're looking to live there in retirement and your tax is going to keep going up, your HOA is going to keep going up, your insurance is going to keep going up. Unless you have a big financial bump in between there, probably shouldn't be buying the house. Just because a loan originator or a mortgage lender says you can afford it doesn't mean you can afford it. Just my opinion. Don't shoot the messenger.
Especially when you're working with an advisor like me, I tell my clients, if you make $100 more to the monthly payment, you shave off like 4 to 7 years of that entire loan term.
We got a lot of things going on here. 50-year mortgages should be illegal. I agree with them. Interest rates is robbery. Yes, not as bad as taxes. But interest, I believe if somebody lends you money, then, they should be able to get something out of it, Houses don't last for 50 years anymore. That's true. That junk that they're building across the street down there, made out of like doggone cardboard. And I don't think they make houses to last hundreds of years anymore. That trade show's been gone a long time. The banks are the ones that make out on this. When you go to lend money, you want a duration, you want an interest rate, and usually you want the ability to get as much capital off that money as possible. You don't want them paying it off in 4 or 5 years, unless you can keep them at the front end of that mortgage and they keep refinancing with you, okay? And you don't want them to pay it off. Like you don't, like when I was lending money, I didn't want people to be able to pay it back quickly. I want them to hold it for a long time, or I don't want to give them the money, because then you're just giving out cheap money.
50-year mortgages. That's like a real thing that they're going to launch here very, very soon. Trump just announced it, and I want to break down a 30-year mortgage for you and a 50-year mortgage for you, because both of them have very high interest on the amount you pay. And would you even save any money with the 50-year mortgage, or is it just significantly worse? I'm going to break it down for you. All right, I got them both right here. I'm going to do a 6% rate. You guys can argue about rates in the comments. 6% just to make it even across the board. 30-year mortgage. Price, $500,000. Down payment, about 20% down, right? $100,000. Mortgage, the amount you're actually financing is $400,000. Payment, $2,400 a month. That does not include taxes and insurance. That's going to vary by state, okay? Interest, you're going to pay $463,000 in interest over a 30-year loan. I think most people don't know that, but maybe a lot do. Total cost, $963,000. You take the actual initial price plus the amount of interest that you paid. That's not including taxes and insurance. $963,000. Is the 50-year worth doing? Okay, I got them side by side right here. $500,000 price, $100,000 down, $400,000 mortgage, $2,100 payment. $2,400 to $21,000. You're saving $300 a month. But how much in interest do you pay? $863,000 versus $463,000, meaning the total cost for this home, if you take $863,000 plus $500,000, is $1.36 million. The 30-year and 50-year mortgage, the American dream.
That's at 6%. It's not going to be at 6%. They're going to keep lowering interest rates because the job market is falling apart, okay? And they've got a lot of problems to plug elsewhere. You got commercial real estate losing its mind. That's going to be a lot lower. They're going to lower interest rates again this month, probably into the next year, because they're seeing the market fall apart. Now, you get 3% or 4% on 50 years, let me tell you what's going to happen. Every investor that can possibly get one of these, and every investor's kids, friends, family, they're going to go in and they're going to throw down these 50-year mortgages at 3%. They're going to take that money that they've got on the side and they're going to throw it in the stock market because they know this is going to print a ton of inflation. It's going to print a lot of real estate inflation. And where do you think everybody goes when they start rehabbing houses and they start buying houses? Home Depot, Lowe's, and they're buying all these products and they're stimulating the economy, and the contractors are coming in. The concrete guys are coming in. They're all coming in. Everybody's making money. They're just going to take that money, throw it in the S&P 500, and it's going to outrun the 3% 50-year note when inflation's at 5, or let's say the stock market's at 10, 15%. And that's what Trump thinks he's going to do. It's going to stimulate the economy with these cheap loans because it's stagnant right now. We just had the worst real estate market since like the 90s this year. And it was rough for a lot of people in real estate. And he thinks this is going to get it going. And it probably is because everybody's talking about it. So what I'm saying is they're just going to play the aggregate, the split on the money in the S&P 500. And you're going to see the share prices explode too. I've always said there was a problem with the idea of a reverse bubble. Not that the bubble pops, it's that it keeps going up because they keep pumping cheap money into the system. And that's what I think is going to happen. If this goes in, it gets implemented in the next 6 months to a year, next year, early next year, the real estate market is going to start going up again. You're going to see competition coming back into the market. And it was a terrible idea. As a real estate agent, this is going to be a terrible idea for America because all it did was allow prices to keep going up. It never allowed them to correct. And the only way you have capitalism, in my opinion, is when dumb ideas get hit over the head and markets correct. For the real estate investor, we never saw anything correct in order to go in and buy properties at a discount. You're going to have to keep paying up for the properties. And many people will say that you don't make money in a straight up market. You have to have corrections. You have to have volatility. You got to let it go up and come back down. And you see that in the stock market. Why do you think the stock market goes like this instead of just like this? I want to know your thoughts. Comments down below. That's my opinion, and it's going to be a rough one. When politicians mess with the market, you always see repercussions, and the repercussions are that the next generation and the generation after that is going to have a really hard time buying houses because they're going to be so expensive. But I'll see you guys in the next video.